tech's already done well. So normally you'd think lower multiples could expect, or at least multiples don't need to stay where they are or contract with a high multiple tech stock. So they could at least feel better about the valuations if rates came down.
Yes, that's right. I think tech is still in a good place because of AI, and NVIDIA should reinforce that. And it's not a demanding multiple. NVIDIA is maybe 28 times forward earnings, which is for the best, one of the most important companies in the world. It's not a high multiple. So if tech is in a good place and then we get Fed cuts, I think it allows the overall market to expand.
Do we see an orderly easing cycle because the Fed doesn't feel like it needs to act intra? They have a meeting where they go 50 or whatever. You think they just 25 and then the next meeting 25, so only do 50 this year and then maybe continue next year? You think it'll be like that?
I think that a soft landing is, the probabilities are going up, and that's why this should be a benign cutting cycle, like good for markets. But I think the key is the Fed getting off data dependence, because data dependence is the reason they missed the inflation turn. And I think now they're missing the soft landing.
Rear view mirror. But is it possible that they're too restrictive right now and that the lag isn't, we don't know how powerful the lag effect of the higher rates could be, and they end up doing 50 or doing a couple of 50s? Is that possible?
I think futures markets are showing more than 2 cuts, so I think the Fed probably is a little behind the curve, and we know there is a recession in housing and durables and auto sales, so there was a lot of pain out there. So cutting more aggressively would actually make sense, at least from the market's perspective.
Where do you think, well, you're a market guy, but where do you think unemployment tops out? Do we get to 5? Do we go over 5% unemployment?
You know, a lot of it has to do with how the Fed communicates to CEOs, because a lot of companies are cautious, right? With monetary policy this tight and real rates this tight, it makes them reluctant to expand. And so the job market itself kind of hinges on what the Fed's doing. And yeah, it could, once the job market starts seeing unemployment rise, it could get bad.
NVIDIA is coming up next week. Josh, you talked about it just a bit earlier in this show. We're going to show a graphic right here just to remind people. We don't talk about NVIDIA as much as we once were talking about it.
Thank
but
God.
Heavy weighting in the S&P, heavy weighting in the NASDAQ 100. Talk to our data team. They say implied volatilities 10% to the upside or downside after earnings. Anastasia, I want to come over to you. Could this be the cause of the volatility that a lot of people are looking at? This earnings report coming up, are you concerned about this and how it might impact the market?
Well, it's obviously an important one for the market, but I'm not overly concerned about it because I have a hard time believing that a company like NVIDIA does not deliver, given everything else that we've heard from Meta and Amazon and others. And what I mean specifically by that is that despite whether those companies right now can monetize AI or not, they're investing in it. They're investing in data centers. They're investing in some of those data center chips. So I think the CapEx cycle is very much alive and well and is being upgraded for 2024 and also 2025. So that, of course, is going to benefit a company like NVIDIA. But it would also broaden this out. This morning, or overnight, I should say, we had a constructive earnings report from Analog Devices. And what I really picked up there is that they're really seeing this trough in industrial and auto end markets. And they're seeing orders that are picking up. So if you take the AI sentiment that is positive and you couple that with a potential trough in cyclical semiconductors, I think that really solidifies what investors should continue to pay attention to this space. And by the way, we're talking about getting back to that all-time high on the S&P. The SOX index, the semiconductors, is still about 10% off the all-time high.
I have a little bit of an unofficial indicator for situations like this that I'd like to share with the audience.
Unofficial, though.
Jensen Huang does not stop doing podcasts. He just did one for Stanford the week before. He did a live thing with Mark Zuckerberg at his own conference. CEOs who are on pace to miss expectations are not hanging out on podcasts like Joe Rogan. So I don't know how you quantify this, but he doesn't stop talking. And so I don't know if it's another drop the mic quarter because the expectations are really high, but it would be hard for me to picture this being a bomb. And by the way, of all the Mag 7 names, I think it's the number 1 or number 2 closest to its record highs. The problem is expecting revenue of $28.6 billion, which would be 112% year-over-year growth. Earnings 64 cents, which would be 137% year-over-year growth. these are really incredible growth rates to sustain when you're already the third largest market cap on earth. So the expectations are high, but the man is out and about. He's not like wearing sunglasses, you know, in a motel room somewhere like Ben Affleck. He is on the scene, and you're not doing that if you're about to shock people to the down. You're just not.
While we're using alternative data, if he switches from leather jacket to jean jacket, what does that mean?
It means he's a certified gangster. What else do you want me to say?
By the way, NVIDIA shares down 1.5%. As Josh was actually talking, the shares have bounced just a bit. That's interesting.
That's my indicator, Frank.
That's
the power of the indicator.
And this is the opposite story we've been seeing from big tech. Microsoft, Google, and Amazon. Those shares were largely punished after earnings because they said CapEx is going to increase to build out their AI ambitions. Apple is the outlier of the group, though, spending relatively little, about 2.5% of sales, according to MoffettNathanson. And that's compared to its peers, of course, spending a lot more than that. We're just going to see how that CapEx picture really impacts, because NVIDIA is the one.
That's the main event.
That is the one anyone really cares about.
Everybody wants to know about that.
And they're the beneficiary of all this CapEx.
I wonder, so if we talk about the way that maybe investors are viewing the overall CapEx picture, is it about now this growth / investing balance that tech has had to strike because of artificial intelligence? Or is it a focus now more, Pippa, I guess, on your side of things, about this idea that if they are spending, it is because they have a reason to, and they need to grow, and that's the reason why we're doing it on the old world value side of the equation?
I think that's it, that we've seen so much momentum and this already, being priced in, kind of the upside from AI, but that's still further down the line. And in some cases, it's almost putting the cart before the horse, because you have to actually build it out first. And there's been so much interest in the cloud and tech and AI, but what about the stuff that actually makes all of that run? And so that's what Bank of America is saying, and others as well, that you have to focus on the companies that provide the materials, the cement, the wiring, the cooling infrastructure, HVAC. Yeah, all these very unsexy areas, but they're the ones that actually make it come to life. And those areas of the market have been overlooked amid this big boom in tech investing.
I just wonder, Stephen, maybe you can add some color to this or not, but all of this is with this idea that there's going to be a massive payoff waiting for these investments. And as people become like, wait, well, what is Microsoft's uptake of these?
That is exactly, and that is the big question. We heard it again and again on these earnings calls this entire season. Okay, you're spending these enormous amounts of money, $19, $20 billion a quarter on capital expenditures. When are we going to see a return? When are we going to see revenue growth? The answer from pretty much everyone is we don't know, but we know the demand just keeps accelerating. In Microsoft's case, they say we literally can't keep up with it. We just don't. They're offloading stuff to Oracle now because they just don't have the capacity to do it. Yeah, so
that's incredible.
So the demand truly is there. You talk about the cart before the horse. I mean, it's already there. Yeah. Like, they don't need to even worry about that. They don't have to prepare for anything. It's here. It's happening. That's what they keep saying. I'll go back to what Alphabet CEO Sundar Pichai said. He said he'd rather overspend than underspend. He'd rather make the mistake and spend too much on all this because of all the demand they're seeing. So it's a very different story than what you typically see.
You know what they called that back in the day? They used to call it, well, it's not just that. They used to call it the field of dreams trade. Which is
really?
If you build it, they will come. That's the whole idea.
But it's already coming, I think, is what we're hearing. It's not hoping they'll come. It's kind of already
But for AI, it's whether or not you hope they will come after the AI has been put in place and all the infrastructure is built out. And that's the whole idea behind why you have to spend on that.
And Pichai's argument is, hey, if I overspend on all this stuff, there are other things we can use that infrastructure for. He didn't really say what, but there's
it won't go to waste.
It won't go to waste, is what he's saying.
The last 2 days, it's been very, very toppy. NVIDIA is the same thing. There's your market leader. It was 105. It went to 130 in 8 trading days. And that's topped out in the last 2 days. You see it moving to the downside again.
What do you make of the fact that we're going into next week where volume arguably will still be light and such large tech catalysts like NVIDIA and Dell?
NVIDIA, that will move the market on Wednesday when we get NVIDIA. But remember, the numbers we know about NVIDIA, their earnings acceleration have been slowing down now for a whole year. We know their earnings are going to be great. They're just not growing as fast as they used to be. They have to find another reason to re-accelerate their earnings growth. I don't know what it's going to be, but the street will be surprised if they dramatically raise their numbers. That'll move it to the upside.
Alright, I hope you are all staying calm in this market and doing well. We have some important things to talk about regarding NVIDIA megacap tech and the market overall. So in my past couple videos, I've mentioned that I didn't like what I was seeing on NVIDIA's chart in the short term, and I thought we could potentially trade lower, or at least remain relatively flat between now and earnings. We were wedged underneath this resistance trend line, and we were seeing slowing momentum show up on the histogram on the daily time frame, and I was slightly concerned. But as I mentioned in yesterday's video, I'm not going to put too much emphasis on technical analysis between now and earnings because NVIDIA's price action in the short term will be largely dependent on the rest of the market and whether or not we see NVIDIA investors take some risk off the table as we head into earnings. Now about today, what happened? Well, this morning I was looking for trading opportunities and I noticed that Microsoft was very clearly trading lower in comparison to its peers. So I thought to myself, what's going on with Microsoft? Well, yesterday afternoon Microsoft announced that they are changing how they report revenue in the various segments. According to CNBC, this is being done to give investors better visibility into cloud consumption revenue. I'll be honest, this gets complicated, but I'm going to try and simplify it as much as possible, so please bear with me here. And remember that this is important for NVIDIA because Microsoft is NVIDIA's largest customer. So Microsoft's outlook for revenue this quarter, Q1 of fiscal year 2025, is still fine overall. They are still guiding for about $64.3 billion in total revenue for the quarter. They did rearrange how revenue is reported in the various segments, but in the end, when you add everything together, Microsoft's total revenue guidance is still just fine. Here's where things get tricky though, and this is what I think caused both Microsoft and NVIDIA to trade lower today. Microsoft updated their outlook for the quarter to include lower Azure revenue growth than what was previously announced. This is a graphic from Microsoft's presentation yesterday. Do not freak out because I am going to walk you through this, and it is much more simple than it seems at first glance. So in this left column is the guidance that Microsoft gave during their most recent earnings conference call under the previous definitions for each revenue segment. And the column on the right-hand side is Microsoft's updated outlook under the new definitions for each revenue segment. Now I want you to focus on one specific line in this graphic, and that is Azure and other cloud services revenue. So under the old definition for this revenue segment, Microsoft was guiding for growth of 28 to 29% this quarter. Remember, this is under the old definition for this revenue segment. Under the new definition for this revenue segment, they are guiding for 33% growth rather than the 28 to 29% under the old definition. This is important because if you apply the new definition of Azure revenue to last quarter's results, then Microsoft would have reported growth of about 34 to 35%. And so now Microsoft is guiding for 33% growth this quarter, which is 1 to 2 points lower than the growth we saw in last quarter's results for Azure and other cloud services revenue under the new definition for this revenue segment. So this appears to have sent Microsoft and NVIDIA stocks lower in today's trading session as market participants started worrying that the rate of growth may be less than what was originally expected. Remember, Microsoft is NVIDIA's largest customer, and since Microsoft and NVIDIA make up such a large portion of the major indices, they pulled the rest of the market down with them. So now the focus turns to NVIDIA earnings next Wednesday on August 28th. Yes, we do have Fed Chair Jerome Powell speaking tomorrow, and that could potentially provide some short-term relief for markets given that the Fed is likely to cut interest rates in September. But I think the larger focus in the market right now is NVIDIA, both their earnings and even more so their forward-looking guidance. Generative AI and CapEx spending on AI have been such integral parts of the market rally this year, and so there is a lot riding on this earnings report next Wednesday. It's not only important for NVIDIA, but it is also very important for the rest of the market. Now, I'll be completely honest, I don't know what the future holds. In the short term, anything could happen. Long term, though, I am bullish on the future of NVIDIA, and I think the company likely has at least another couple years of strong growth ahead of it. Of course, I could be wrong and nothing is guaranteed, but I think NVIDIA still has more runway over the next couple years as all of the hyperscalers have been increasing CapEx spending on AI by billions of dollars. The hyperscalers simply cannot afford to be late on AI, and they must invest heavily in AI now, or they will be quickly left behind by their competitors. So short term, I don't know what will happen, and I have no idea what NVIDIA's earnings or guidance will be. Long term, though, I think NVIDIA still has brighter days ahead. If Blackwell is delayed, that doesn't really concern me regarding the long-term future of NVIDIA because they can simply sell more H100 GPUs in the interim, and they would likely just guide higher for future quarters in which they expect Blackwell to ship in volume. At least that's how I see it. With all of that being said, I hope you're all staying calm in this market, and I'm curious to hear your thoughts about NVIDIA in the comments below. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.